I was sitting in front of my terminal yesterday, just watching the tickers scroll by, drinking my third coffee, and I saw something that I legitimately thought my screen was broken.
Laughing slightly. Okay.
Or that I'd accidentally, logged into some kind of parody simulation of the stock market. It's one of those moments where you have to rub your eyes and look again.
I think I know exactly which glitch
Yep.
you're talking about. You're talking about the algorithm freakout, the one with the karaoke company, right?
The karaoke freakout, yes.
Yeah.
Okay, for everyone listening, I have to set the scene here because you literally cannot make this up. There's a company, it's called Algorithm Holdings.
Right.
Tiny. A microcap company. We're talking under $3 million in total value. There are luxury condos in Miami that cost more than this entire company.
Sure. That's pocket change in market terms.
And until very recently, their primary business, their whole reason for existing, was making karaoke machines.
We're talking microphones, lyrics scrolling on a screen, backing tracks for Sweet Caroline.
Yeah.
Not exactly high finance.
Not at all. Not cutting-edge tech.
Yeah.
But then, earlier this week, they issue a press release. And they do the one thing you do in 2026 if you want to pump your stock and get noticed.
They sprinkle the magic dust.
They use the words AI and trucking efficiency in the same paragraph. They claim they have a new tool for logistics.
And Marcus' reaction was, well, Pavlovian is putting it mildly.
It was beyond Pavlovian. It was psychotic. This press release from a literal karaoke machine maker, it triggered the high-frequency trading bots. The algorithms scraped the text, saw AI next to logistics, and they panicked.
And not in the way you'd think. They didn't just buy the karaoke stock.
Oh, you did that too. The price went to the moon.
Yeah.
But they also aggressively dumped shares of C.H. Robinson and Landstar System.
And just to clarify for you, C.H. Robinson and Landstar are not karaoke companies. These are massive, multi-billion-dollar blue-chip logistics firms that move actual things around the world.
Billions of dollars in market cap. Just evaporated. In minutes. C.H. Robinson dropped, something like 15% in a flash crash? And why?
Because the machines are programmed with a simple and, frankly, terrifying heuristic.
If new AI competitor appears, then sell legacy incumbents. It's that simple.
They didn't check if the product was real. They didn't check if the karaoke company had a single truck or even a working software demo. They just sold.
It's a perfect if.
Yeah.
Terrifying encapsulation of the current market psychosis, what we've been talking about. Sell first, investigate never.
And I want to push back on the idea that this is just a funny glitch or a comedy sketch. There is a rational fear buried under that algorithmic stupidity. The bots are dumb, sure.
Right.
But the thesis they're reacting to is actually sound.
That the middleman is dead.
Yeah. That the middleman is the most dangerous job title in the entire economy right now. The market is absolutely, fundamentally terrified that coordination, the act of just moving things from point A to point B, whether it's data or freight or strategy, is about to be priced at zero.
And that, I think, brings us to the mission for today's deep dive. We're calling this one the Great Rotation. We've gone through Mehta's latest market intelligence stack. We've got some intercepted intelligence logs, and we have some very, very dense scientific journals to get through.
Yeah, a lot to unpack.
And the thesis connecting all of these sources is that we are moving from the hype phase of all this tech right into the brutal reality phase.
And we're breaking this down into 3 very specific reality checks. First, we have what we're calling the AI wrecking ball. We're going to look at why that karaoke crash actually matters and why Microsoft's latest move suggests the junior associate economy, the entire white-collar backbone, is about to face a genuine extinction event.
Okay, then second, we're looking at the energy reality check.
Yeah.
The EV dream. It's hitting a brick wall. We have the numbers to prove it. And capital is just fleeing into the only thing that can actually feed the data centers. Nuclear uprates, specifically. And third, body and biology. It's not just about weight loss anymore. We're looking at how Ozempic is permanently altering the food economy and then some breakthroughs in cancer and anti-aging that, frankly,
they sound like they belong in a sci-fi novel.
They really do.
It's a heavy stack today. We've got intelligence logs, macro synthesis. So let's not waste any time. Let's dive right into the deep end. The AI wrecking ball.
Let's do it.
So we've established the market is jumpy, but let's look at why the timeline has accelerated so drastically. I was reading the notes on Mustafa Suleyman. He's the new AI chief at Microsoft, basically the guy running the show. And he dropped a quote that frankly made my blood run a little cold.
It is the 12 to 18 month quote. It's been circulating in the back channels for a bit now. Right. He explicitly predicts that most complex white-collar tasks, like project management, tax accounting, legal discovery, logistics coordination, will be fully automated within 12 to 18 months.
Not 5 years. Not 10 years.
Not someday. We're talking next year.
And we really need to contextualize who is saying this. This isn't some futurist on a TED Talk stage trying to sell a book.
Yeah.
This isn't a YouTuber hyping a new crypto coin. This is the guy effectively running the biggest, most well-funded AI lab on the planet. He sees the model weights. He sees the capabilities of GPT-5 or whatever internal code name they're actually using.
So when he says fully automated,
he means the AI doesn't just help the project manager. The AI is the project manager.
That distinction is so crucial, and I really want to unpack it. We've spent the last couple of years talking about copilots. You know, the AI helps me write the email, but I hit send.
Right.
The AI summarizes the meeting, but I make the decision. Suleiman is talking about agents.
Correct. An agent is autonomous. The AI writes the email, it sends the email, it schedules the follow-up meeting based on the reply, it updates the CRM spreadsheet, it bills the client, and it orders the coffee for the next meeting.
It closes the loop.
It closes the loop without any human intervention.
And that shift from copilot to agent is exactly why we saw that flash crash with C.H. Robinson. Think about what a logistics broker actually does all day.
It's pure coordination.
They sit in the middle, they take a phone call from a shipper who has a pallet of bananas in Florida, and they call a trucker who has an empty truck in Georgia. They connect the two, they take a spread on the price.
It is pure information arbitrage. And the short thesis in Manal Mehta's report is just brutal on this point. If an AI agent can scan the entire freight network in a millisecond, negotiate the price with another AI, verify the insurance, and book the truck for a fraction of a cent.
What is the human broker doing?
They're looking for a new job. That's what they're doing.
Yeah, exactly.
Yeah.
And it's not just truckers. The report specifically flags Accenture. Now, Accenture is a massive consulting firm. I mean, they're the gold standard for corporate strategy, right?
Right, a blue chip name.
But their whole model is hiring armies of smart 22-year-olds to make PowerPoints, to crunch Excel sheets, and to do basic data analysis.
It's the junior associate model. It's the backbone of the entire services economy. You hire smart kids fresh out of college, you train them, you bill them out at $300 an hour to do process work.
But if Microsoft's new agents can do the research, build the presentation deck, and run the financial model for 5 cents of compute power,
the margin for that human labor completely collapses. It's gone.
It creates an existential crisis for their entire business model. The report calls it an extinction-level event for high-touch, low-tech business models.
And the irony is just, it's so thick, because Accenture is a huge partner of Microsoft. They're out there helping other companies implement the very technology that might just eat their own lunch.
It's the classic innovator's dilemma on steroids, isn't it?
Absolutely. Microsoft is building the infrastructure to make their own partners' workforce obsolete. The report notes they're moving from just enabling OpenAI to competing with everyone for what they call humanist superintelligence.
So if the middle is collapsing, if we're shorting the brokers, the consultants, the people who just move paper, where does the value go? Because the money doesn't just disappear. It has to flow somewhere.
It migrates to the edges. That is the core of this great rotation thesis. You want to own the raw inputs, the atoms, and you want to own the highest level of intelligence.
Okay.
The report highlights two very different buy signals here. One is a familiar name, Palantir.
PLTR. Okay, they've been the retail darling for a while now, but the institutional thesis is shifting, isn't it? It feels like it's less about commercial AI helping you sell more soap.
And more about war software.
Yeah.
Unfortunately, yes. We'll touch on the China situation later in the show, but as the world gets more kinetic just, more dangerous governments do not want a chatbot.
They want to kill chain.
They want to kill chain. They want data fusion.
Okay, define data fusion for us. How is that different from what other companies do?
It's the ability to take all these disparate, messy streams of data satellite feeds from one vendor, intercepted radio logs from another, logistics spreadsheets, drone video footage, and fuse them into a single coherent picture of the battlefield in real time.
So it's not just summarizing text.
No. Palantir's platform, Foundry, and their new AIP, they're integrating reality. Palantir isn't just a tech company anymore. They are a defense prime contractor in the age of software.
So that's the high intelligence edge of the barbell. What about the atoms edge? The report mentions arconic, ARNC.
Arconic.
Aluminum. That feels, I don't know, almost regressive. We're talking about super intelligence and then Cheap metal.
It feels very 20th century, doesn't it? But you have to look at the context. We have a massive rotation happening in the auto industry, and automakers are terrified of supply chain disruptions. They have realized in a very painful way that you cannot download a car door.
No, you can't.
You cannot prompt engineer an airplane wing.
You actually need the stuff.
You need the stuff. Arconic makes the high-grade aluminum that goes into aerospace and automotive manufacturing. The thesis here is onshoring. As global supply chains break down or just get too risky, manufacturers in the U.S. need domestic metal. They need physical certainty.
So they're prioritizing real assets over paper-pushing assets.
Exactly. So the trade is, sure, the people who move the spreadsheet, like the logistics and consulting firms, and you buy the people who write the war code, Palantir, and the people who smelt the actual metal, Arconic.
That's the great rotation in a nutshell. Real assets and superintelligence.
And everything in the middle is just, it's risk.
Okay, speaking of real assets in the auto industry, let's pivot to the energy reality check. Because for the last 5 years, the narrative has been so linear. If you listen to any earnings call, it was just, buy EVs, everything is going electric, infinite growth.
And looking at these numbers, that party isn't just over. The police have arrived, shut down the venue, and are writing tickets.
The numbers from the fourth quarter are staggering. U.S. EV sales dropped 30%.
30%.
Wait, not 30.
30%.
That's not a slowdown. That's a cliff. That's a flat-out rejection by the consumer.
It's a collapse in organic demand. We have to be really honest about what was propping this whole thing up. Subsidies. The report notes that the $7,500 tax credit expiration was the pin that popped the balloon.
Right.
Without that government sweetener, the consumer math just isn't there at the scale that they predicted.
And the reaction from Detroit has been, it's been swift and almost panic-stricken. Usually these big automakers turn like ocean liners, slow, steady. Yeah. But GM and Ford are pivoting hard.
They're canceling EV truck factories. They're delaying battery plants. And here is the detail in the intelligence logs that really, really struck me. They are putting in rush orders for V8 engine components.
The V8 is back. I honestly did not see that coming. I thought the internal combustion engine was, walking the green mile.
It was, until the capital reality set in. The report notes over $50 billion in write-downs across the industry related to these EV ventures.
$50 billion.
That is a massive amount of capital just lit on fire, chasing an infinite demand narrative that just hit a brick wall.
And that fire's burning the miners too, right?
Mm-hmm.
I'm looking at lithium. For years, the trade was, buy lithium, we'll run out of it. And now?
Now, companies like Lithium Americas, LAC, they're being crushed. Their valuations were based on these exponential growth charts that simply do not exist anymore.
So it's a classic commodity bust.
Exactly. Supply came online just as the projected demand fell off a cliff. But here's the twist. The energy demand itself isn't going away. It's just shifting customers.
The car doesn't need the electricity anymore.
The computer does.
Right. The AI wrecking ball needs the electricity. Massive amounts of it.
Contrast the EV slowdown with AI's hunger. There was a fascinating stress test mentioned in the report. It involved a winter storm.
I saw that.
During a recent storm, electricity prices spiked because of demand. The crypto miners, the Bitcoin farms, they powered down.
Okay.
Because they're price sensitive. If electricity costs too much, mining Bitcoin isn't profitable, so they just turn off the rigs. They have an off switch.
They have an off switch. What about the AI data centers?
They stayed online. They didn't even blink. They paid the surge pricing. Their demand is what the report calls brutally inelastic.
They can't turn off the brain.
You can't. Microsoft, Google, Anthropic, they are fighting an arms race for intelligence. They cannot afford downtime. So you have this collision. Renewable energy is intermittent. The sun doesn't always shine. The wind doesn't always blow. And you have this new customer AI that demands 24/7 massive, stable baseload power.
And wind and solar alone can't do that.
Not with current battery tech. They can't support that level of stability.
Which brings us to the nuclear renaissance. Now, I feel like we've been hearing about nuclear making a comeback for a decade, but it never really seems to happen because it takes so long and costs so much to build the plants.
And that is the traditional problem. You're right. A new reactor takes 10 to 15 years and billions and millions of dollars. It's a civil engineering nightmare. But the source highlights a company called Alva Energy, and they're doing something very different.
Okay.
They aren't building new reactors.
So what are they doing?
They're uprating.
Uprating. Okay. Unpack that for us. What does that mean?
Basically, they go to an existing nuclear plant. One
Yeah.
that's already licensed, already sitting there, already has the concrete poured and the fuel security handled, and they retrofit it. They swap out the steam turbines, the heat exchangers, and the high-pressure systems with modern, more efficient technology.
So they're basically taking a 1980s engine and slapping a turbocharger on it.
That's a perfect analogy, yes. They can boost the output of that existing plant by 20 or even 30%. And the key here is speed. They can do this for about $1 billion in under 5 years.
Which, in the world of nuclear infrastructure, is light speed.
It's unbelievable, and I see here in the notes that Pat Gelsinger is involved, the former CEO of Intel.
He's on the board. That is a huge signal. It suggests this is being viewed as a tech enabler play, not just a boring utility play. Silicon Valley knows they need massive power, and they know they can't wait for 2035 for a new plant to come online. So Alva Energy is the bridge.
It's the bridge to feed the beast.
So the energy trade completely flips. You fade the green dream of consumer EVs, at least for now, and you buy the grid. Specifically, the nuclear backbone that keeps the AI lights on.
Precisely. It's a shift from consumer-driven energy, which is cars, to industrial-driven energy, which is compute.
Okay, let's move from the health of the grid to the health of the consumer.
Yeah.
This section on the Ozempic economy is, well, if you own junk food stocks, it's got to be depressing.
It's fascinating data. We finally have what you could call a smoking gun signal that these GLP-1 drugs, Ozempic, Wegovy, Mounjaro, are actively hurting food companies.
The Magnum signal.
The Magnum signal, right.
Yeah.
Unilever spun off their ice cream business, which includes Magnum, and right after the spinoff, the shares tanked 14%. And it wasn't a market thing. It was because sales volumes dropped.
People just aren't buying the ice cream.
They aren't. And the market is attributing this directly to the suppression of appetite and cravings caused by these drugs. It's not just a cyclical dip. Analysts are seeing it as a structural decline in indulgence foods.
And the source recommends a short position on McDonald's. That feels almost sacrilegious. Shorting Mickey D's, they're like the cockroach of Wall Street. They survive everything.
They usually do, yes, but you have to think about the mechanism of these drugs. They stop what people call the food noise. They make you feel full faster, and they specifically curb cravings for high-fat, high-sugar, high-calorie foods.
Which is the entire McDonald's menu.
It's their entire business model. The report argues that even with their value menus, the total addressable market for a Big Mac is shrinking every single time a doctor writes a new prescription for Wegovy, and we are talking about millions and millions of prescriptions.
So if people aren't eating Big Macs and Magnum bars, what are they eating? Or are they just, I don't know, photosynthesizing?
No, they're shifting to what the report calls the protein pivot. The portfolios of these big food companies are moving away from snacks and sweets and toward wellness and protein providers.
So yogurt, protein shakes.
Lean meats, that's where the consumer dollar is going. If you're eating less volume, you have to make sure what you do eat is nutrient dense. It's a permanent changing of the consumer guard.
It feels like the end of the age of indulgence. And that's a massive cultural shift, not just a financial one.
It really is. And it segues perfectly into our next section, because while we're treating obesity with biology, we're also seeing some absolute breakthroughs in treating even scarier things.
Frontier science. This is the stuff that usually goes way over my head, but the sources today make it pretty clear. We've got 3 big ones: cancer, obesity-linked cancer, and reversing aging in the brain.
Let's start with the cancer breakthrough. This is about so-called cold tumors.
Okay, explain cold. What does that mean in this context?
So, in immunotherapy, a hot tumor is one the immune system can see and can attack. A cold tumor is effectively invisible. It hides. Pancreatic cancer, for example, is often cold. It's a big reason why it's so deadly.
He's wearing an invisibility cloak.
That's a great way to put it. The tumor cells lower a specific flag on their surface called MHCI. This flag is what tells the immune system, hey, I'm a problem cell, come kill me. The cancer cells find a way to pull that flag down.
Sneaky.
Very. But this new research from one of the journals actually found the mechanism. It's a protein called ERK5. Turns out ERK5 helps the cancer degrade those flags. It basically chews them up so they can't be displayed on the cell surface.
So the cancer is using this ERK5 protein to shred its own ID card.
Exactly. So the breakthrough is, in concept, very simple. If you inhibit ERK5, if you block that shredder, the cancer is forced to show its flag again.
And then the immune system can see it and attack.
Boom, the cold tumor becomes hot. This could be an absolute game changer for pancreatic cancer and other types that have been resistant to immunotherapy.
That is incredible. And there was another one in the stack linking obesity specifically to pancreatic cancer, right?
Yes. We've known for a while that obesity increases cancer risk, but we didn't know the exact how. This new research identifies a specific receptor called P2RX7.
Okay.
Basically, the chronic inflammation caused by a high-fat diet activates this receptor, and that activation makes the cancer much more aggressive.
So if you can find a drug to block that receptor.
You can specifically treat the cancer in obese patients. It's a huge demographic overlap, unfortunately. But this gives us a very targeted weapon.
Okay, those are big. But the one that really sounded like it was straight out of science fiction was this research on zombie cells in the brain.
Senolytics. This is a burgeoning field. So as we age, some of our cells stop dividing. They don't die, but they don't work properly either. They just sit there. We call them senescent cells or zombie cells.
And they aren't just harmless squatters taking up space.
No, far from it. They're toxic. They secrete this inflammatory sludge, the technical term is SASP, or senescence-associated secretory phenotype. It inflames and damages all the healthy cells around them.
Okay.
This study looked at optic nerve injuries. They found that this zombie sludge actively prevents nerves from regenerating after an injury.
So wait, the reason your brain or spinal cord doesn't heal isn't just because it can't, but because these zombie cells are actively stopping it from healing.
That is the hypothesis. And here's the breakthrough. If you use drugs called senolytics to clear out the zombie cells, to literally kill the zombies, or if you use other drugs to block that sludge signal,
the nerves start to regrow.
The nerves actually start to regenerate.
For spinal cord injuries, for strokes, for Alzheimer's, that changes everything.
It's true regenerative medicine at the cellular level. Instead of trying to force new growth, you're just removing the brake that was on the system the whole time.
And finally, in the science lab, we had something called the genetic toolkit. This one was about a volume knob for genes.
Right. Usually gene therapy has been very binary, on or off. You cut a gene out or you add a new one in. But biology is way more subtle than that. Sometimes you don't want to turn a gene completely off. You just want to turn it down a little.
Like dimming the lights in a room instead of just flipping the switch off.
That's it, exactly. Researchers found these universal regulators, proteins like one called RCOR1, that work across plants, yeast, and humans, and they allow for programmable gene control. You can dial the expression of a gene up or down.
Which is crucial if you're trying to balance complex body systems. You don't want to accidentally turn off something vital while you're trying to fix something else.
Precisely. It's about precision and subtlety, which is where gene therapy needs to go next.
Okay, let's step out of the lab and into the shadows. The Intelligence Bureau section. This is where we look at risk, governance, and the often ugly side of how the world really works.
And we have to start with the ghost that just will not go away, Jeffrey Epstein.
It's been years now, and yet the documents keep coming out and heads keep rolling. It's unbelievable.
It's a governance nightmare. The report calls it mispriced risk, and that's the perfect term. Look at Goldman Sachs. Their top lawyer, Catherine Rumler, just resigned. Why? Because these new docs revealed she was a backup executor for Epstein's will and that she received luxury gifts from him.
And Goldman stood by her for months. They knew this was out there.
They did, until the evidence became undeniable and public, and that's the lesson for investors here. Boards are paralyzed. They hope this stuff just blows over. It doesn't.
And it's not just Wall Street. The NFL is involved now, which is a whole new level.
Steve Tisch, the owner of the New York Giants. The released emails suggest Epstein was introducing him to young women, facilitating what the logs call transactional meetups.
That is just ugly.
It is. And financially, the risk here is that the brand safety of these massive organizations gets compromised. If sponsors start pulling out of the Giants, or if clients leave Goldman because they don't trust the judgment of the leadership, that is real money being lost.
So the advice here is what? To literally audit your portfolio for Epstein risk.
It sounds strange to say, but yes. If a CEO or a key board member has a connection that hasn't been fully vetted, it's a ticking time bomb on your balance sheet.
Wow. Okay, moving from domestic scandals to international spycraft. The CIA released a video.
In Mandarin. A recruitment video explicitly targeting Chinese military officers to get them to defect or to spy for the U.S.
That is incredibly bold.
It's incredibly aggressive. But it tells us something really important about what the CIA thinks is happening inside China. They believe Xi Jinping's purges, he's been firing generals left and right, arresting people for corruption, have created deep cracks in the military's loyalty.
Disgruntled officers who are afraid they're next.
Exactly. If you are a general in the People's Liberation Army and you see your friends and colleagues disappearing, you might be looking for an exit strategy. The CIA is now openly offering one.
And how does this translate to a trade?
It just reinforces the Palantir thesis. The world is entering a new phase of what you could call asymmetric intelligence warfare. If the U.S. and China are actively trying to subvert each other's militaries, the value of real-time intelligence data becomes, well, priceless.
It's a dangerous game. And speaking of dangerous family dynamics, let's talk about South Korea, the chaebol problem.
This is a fascinating cultural insight from the intelligence logs. So the late chairman of LG, the electronics giant, he died. His widow and daughters sued for their share of the inheritance. They claimed they were tricked into giving it all up to the adopted male heir.
And what did the court rule?
The court sided with the male heir.
In 2026.
In 2026. And the rationale the court gave was that they needed to maintain management stability of the conglomerate.
Wow.
So in the world of Korean chaebols, the primogeniture rule, this ancient idea that the eldest male runs the show, is apparently still stronger than modern inheritance law.
So if you are investing in a Korean company, you have to understand that the game is rigged for the founding families, not necessarily for the shareholders.
Correct. The Korea discount on their stocks exists for a very real reason. Governance is, let's say, flexible when it comes to family control.
And finally, in this section, let's bring it back home to the U.S. aviation. Flying lately has been a nightmare for a lot of people, but the report says it's not just weather or staffing.
It's political. The current Trump administration has been making very abrupt, very unpredictable policy changes. Sudden flight bans over El Paso that then get reversed a few days later. Decertifying certain Canadian aircraft on short notice with no warning.
It's chaos.
It's operational instability. If you are an airline planner, you can deal with storms. You have models for that. You can't deal with a government that changes the fundamental rules of airspace at 2 o'clock in the morning on a Tuesday.
So the entire sector is basically uninvestable due to that regulatory volatility.
For now, yes. Until things calm down and there's a predictable framework, it's just gambling.
Okay, we're heading into the home stretch now. Section 6, special situations. This is the deep value bin. This is the stuff that everyone hates, but where there might be a gold mine hidden.
These are the contrarian plays. High risk, high reward. You have to have a stomach for these.
First up, Luminar. Ticker is LAZR. The LiDAR company for self-driving cars.
And it is priced for bankruptcy. The enterprise value is under $400 million. The market thinks it's going to zero. But the thesis here is that it's a very cheap call option. They just need one more contract.
Just one.
One more Tier 1 automaker to sign on the dotted line and say, yes, we are using Luminar for our next generation of self-driving cars.
And if they get that contract,
you get a massive short squeeze. The stock could double, triple, maybe more overnight. But if they don't get it, it probably goes to zero.
A true binary bet.
Well,
zero or hero. I like it. Next up, Sangamo Therapeutics, SGMO.
A very similar story. A biotech priced for death. They have a gene therapy for Fabry disease, ST920, just sitting there on the shelf. If they can sign a partnership deal, get Big Pharma to come in and pay for the trials and marketing.
That deal alone could be worth more than the entire company's current value.
That's the bet. You're essentially buying the drug and getting the rest of the company for free. But again, if the deal doesn't happen, they eventually run out of cash.
And the last one on the list, Angie Inc., ANGI. This used to be Angie's List.
Everyone hates this stock. It's been in what looks like a terminal decline for years, but it's trading at roughly 5 times free cash flow. That is dirt cheap.
So the bet isn't even that it grows. The bet is it just stops bleeding.
Exactly. Or that AI finally helps them fix their service. If they can use AI to verify contractors better or to smooth out the booking process, they don't need to grow 20% a year. They just need to stabilize. At this price, simple stability is a huge win.
Deep value, digging in the trash for diamonds.
Sometimes that's where our best alpha is hiding.
So we've covered a lot of ground today, from karaoke crashes to zombie cells in the brain. Let's try to synthesize this. What is the big picture for you, the listener?
The big picture, the one word that comes to mind, is dislocation. The middle is collapsing. We saw it with the logistics brokers. We're seeing it with mid-sized asset managers like Schroeder's getting bought out. The safe, middle-of-the-road business models are dead.
So you can't be in the middle. You have to go to the edges.
You have to go to the extremes. The barbell strategy. You want the raw atoms, nuclear power, aluminum, even lithium if the price gets low enough. The real stuff you can kick. And on the other side of the barbell, you want the highest level intelligence palantir, the proprietary AI models, the biotech IP.
The atoms and the algorithms.
The atoms and the algorithms. Everything else in between is just noise and risk.
Before we sign off, I want to leave everyone with one final thought that's been bugging me from the research. We saw a brief mention in the venture radar of a new startup called Simile AI.
Oh, yeah. The digital twins company.
Right. They're building digital twins of people for enterprise decision-making. Basically, a detailed learning digital copy of you that can sit in meetings or simulate how you'd react to a new corporate strategy.
It's extremely ambitious technology.
But combine that with Mustafa Suleyman's prediction. Microsoft says your actual job, the tasks you perform, will be automated in 18 months. And this other company, Simile AI, is building a digital copy of your personality to make decisions.
I see where you're going with this.
Are we heading toward a world where the economy just runs itself? It's powered by nuclear uprates. It's managed by autonomous AI agents. The big decisions are made by these digital twins. And the humans are just, I don't know, sitting at home, managing their health with Ozempic and anti-aging peptides.
It raises the ultimate economic question, doesn't it? In that world, who is the customer? If the AI earns the money and the AI makes the decisions, do they even need us to buy the Magnum bars anymore?
Apparently not, since we're all on diets anyway.
It's a brave new world.
It certainly is. Keep digging deep, everyone. We'll see you on the next one.
Still curious.